Welcome back to the channel. Today, we're diving into a topic that affects every single one of us, every single day: money. We use it, we chase it, we think about it constantly. But have you ever stopped to wonder, how did we even get here? How did we go from folks trading goats and grain to sending Bitcoin across the internet in mere seconds? It's a wild ride, and trust me, it's far more fascinating than you might imagine. Join me as we embark on an incredible 5,000-year journey through the history of money. We'll explore how it evolved from the simplest exchanges to the complex systems we have today, why it matters so much to our societies, and, most importantly, what these ancient lessons can tell us about the future of wealth. Get ready to have your mind blown. All right, let's rewind the clock way back, before coins, before banks, even before written language. Imagine a time when you needed something, say a new clay pot, and you had perhaps a sack of wheat. How did you get that pot? You traded. This was the original economic system, known as barter. Sounds simple, right? Well, it was, but it also had a major snag. For a trade to happen, both you and the potter had to want what the other person had. You wanted his pot, and he had to want your wheat. Economists call this the double coincidence of wants, and it was a massive limitation. Try to picture buying bread in a crowded market with a live goat. It just doesn't scale. As societies grew and became more complex, barter quickly became inefficient, even chaotic. People started desperately seeking something, anything, that everyone would agree had value and could be easily exchanged. And that brings us to our next big step, the birth of commodity money. To solve the tricky problems of barter, ancient civilizations got creative. They started using items that had an inherent natural value to everyone. We're talking about things like salt, beautiful seashells, precious gold and silver, even cocoa beans in some cultures. These all became money. But why these specific items? Simple. They were scarce, making them valuable. They were durable, so they wouldn't rot or break easily. And, crucially, they were widely accepted as a medium of exchange. Take ancient Rome, for instance. Soldiers were actually paid in salarium. That's right, salt. It's where we get the word salary from today. In parts of Africa, cowrie shells served as currency for centuries. But eventually, gold emerged as the universal superstar of commodity money. It was easy to carry, virtually impossible to fake, and let's be honest, absolutely beautiful to look at. Gold quickly became the ultimate symbol of wealth and trust. Then came a truly revolutionary idea, the first official coins. This game-changer appeared in a place called Lydia, which is modern-day Turkey, around 600 BC. These weren't just random chunks of metal. They were carefully stamped with royal seals, signaling the dawn of standardized money. No more weighing out gold dust or counting individual shells. These coins were portable, verifiable, and everyone knew their exact value. Coins rapidly spread throughout Greece, Rome, India, and China, absolutely transforming trade, making taxation much simpler, and ultimately enabling the rise of vast empires. For the very first time, money wasn't just a medium of exchange. It was a tangible symbol of trust, backed by the authority of the state. However, as empires grew and faced financial pressures, the temptation became too great. Rulers would often try to debase their coins by mixing in cheaper metals, secretly hoping to stretch their resources. But this always led to a predictable and painful outcome: rampant inflation and, eventually, economic instability and collapse. A powerful lesson that still resonates today. Fast forward several centuries, and we arrive at another monumental shift: paper money. Can you believe it? The first paper money emerged in 7th century China during the Tang dynasty. Imagine that. It was lightweight, super easy to carry compared to heavy coins, and crucially, it was backed by either gold or the rock-solid promise of the government. Europe, ever so slightly behind, eventually caught on centuries later. This is when banks really started to come into their own, issuing notes of credit that people could use just like physical money. And just like that, the power to create money shifted dramatically. It wasn't just about owning gold anymore. It was about trust. Trust in the bank and trust in the government that backed it. This was a radical change, moving from tangible value to a system built on faith and promises. It's hard to overstate how much this transformed global commerce and the very concept of wealth. By the 19th century, nations around the world sought stability in this new system. Their solution? The gold standard. Countries officially linked the value of their currency directly to a specific amount of gold. This created immense stability and confidence in international trade, a sort of golden era for global finance. However, as economies expanded at an unprecedented rate, gold simply couldn't keep up. There wasn't enough physical gold to back all the money being created and exchanged. Then came the ultimate tests, the Great Depression, 2 devastating world wars, and the relentless pressures of global trade, all of which exposed the cracks in the gold standard. The system became unsustainable. Finally, in 1971, President Nixon made a monumental decision, officially ending the gold standard for the United States. From that moment on, the US dollar, and by extension many other global currencies, was no longer backed by a physical commodity. Instead, its value became entirely dependent on trust. Trust in the government, trust in its policies, and the collective belief of people around the world. A truly symbolic moment in financial history. And just like that, we hurtle into the digital era. Suddenly, money wasn't just physical cash or gold. It was data. Think about it. Credit cards, those convenient ATMs, online banking accessible right from your phone. These innovations transformed how we interact with our money. Trillions of dollars, euros, yen, and more now move digitally every single second, crisscrossing the globe at lightning speed. This incredible convenience has undoubtedly revolutionized commerce and made our lives so much easier. But, as with all powerful changes, it also brought a whole new set of risks. We're talking about things like fraud, the rise of easy debt, and the ever-present challenge of inflation. Our digital financial world is a marvel, but it requires constant vigilance and a keen understanding of its intricacies. It's a brave new world where our money often exists only as numbers on a screen. Then, in 2009, something truly revolutionary happened. A mysterious figure, or perhaps a group, known only as Satoshi Nakamoto, introduced Bitcoin. This wasn't just another digital currency. It was a completely new kind of money, designed to be free from the control of governments and traditional banks. The secret sauce, blockchain technology. Imagine a public, immutable ledger that records every single transaction, transparently and securely. This groundbreaking innovation allowed Bitcoin to be the first truly decentralized form of money, meaning no single entity controls it. It was a bold statement, challenging the very foundations of the financial systems that had evolved over millennia. Bitcoin opened the floodgates for countless other cryptocurrencies, sparking a global conversation about the future of finance, privacy, and who truly holds the power over our money. It's an ongoing experiment, but one that has undeniably captured the world's imagination. So, after this incredible journey from bartering goats to buying with Bitcoin, what's next for money? The future is absolutely buzzing with possibilities. We could see the widespread adoption of digital central bank currencies, bringing government-backed digital cash directly to our phones. Imagine artificial intelligence not just assisting, but driving complex financial decisions and strategies. And then there are tokenized assets, where real-world things like property or art can be represented and traded digitally on a blockchain. These are not just sci-fi concepts, they are emerging realities that could redefine money yet again. But one thing remains constant, from the earliest days of barter to the cutting edge of crypto. Money has always, at its core, been about one thing: trust. As long as humans need to trade, to exchange value, to build and innovate, money will continue its incredible evolution. If history teaches us anything, it's this profound lesson. Understanding money isn't just about economics. It's about understanding power, influence, and the very fabric of human civilization. It shapes our societies, our governments, and our daily lives in ways we often don't even realize. Thank you so much for joining me on this deep dive into the true history of finance. I hope you found this journey as fascinating as I did. If you enjoyed this video, please hit that like button, subscribe to the channel for more financial documentaries, economic history, and wealth education, and share your thoughts in the comments below. What part of money's history surprised you the most? We love hearing from you. See you next time.